Good afternoon, YouTube live room. So what are we doing in here? We're watching that the markets are getting right up to resistance. That's number one. Number two in here, there were a number of things that looked pretty good, and now they're just sort of sitting there. So I thought I'd go over a number of things with you of what we're watching. Number one of the biggest things we watch in correlations is we're watching the Russell. As you see, it's so, and we watch price support. Now, I got to go over, and this is just something I see on the internet. Just keep in mind that if you're going to look at anchored VWAP or this or that, there's a million different ways to draw them where you can get them to fit what you're doing. The point is, though, you want to find where things are going to bounce. And if you don't know how, just go back and look at prior things. I'll show you what we're talking about. So number one, we're keying off the Russell today, the weakness in the Russell. And the reason we're going over it, and I'll also show you candlestick patterns. But the reason I'm showing this is on a daily chart. When you go to the Russell in here, you're going to see the Russell has been leading to the downside. I mean, that doesn't mean it's going down today. Don't get me wrong at all. So I'm just saying that in the daily chart, it's stuck at the resistance. So just keep that in mind in here, right here. Just stuck at resistance. So that's the thing. And today it's down in the dumps. So it's only up 9. It was up 30. The key is if you want the markets to continue up, and that's fine if you want them to continue up, but you better get the things that led to the downside for months to start leading to the upside. This did temporarily. So here's a little bull flag. There's a little squeeze right there, but you had the bull flag action right there that messed you up. I mean, the resistance. So like I said, you can put in 8 million things and get them to fit. So you could do an anchored VWAP from here. You could do an anchored VWAP from the beginning of the year. You could do an anchored VWAP from like underneath. And I'm telling you, you're going to find somewhere where it fits. But that's not going to help you make money. So I just want you to know that. So right now, when you look at the Russell and or any of the indexes, and you see where they just stopped, where did they stop? They stopped at prior support. So you're going to see this if you put in 2-minute chart, and you'll see the Russell back here sold off. And where'd it go? Prior tops and prior bottoms. I have no indicators on the chart. Now, indicators can help a lot. Don't get me wrong. But they had stopped at price support. So that's what it did. It stopped at price support. How about now? It stopped at price support right in here. That's all I'm telling you. It stopped right at the price support. And I'll tell you right now, like I said, a lot of indicators work. But Lorna, how many times have you used only the rectangle? I know you have. The old rectangle. And the key, and this is also, you could call it boxes, rectangles, Darvis box. This is right out of JC's book. With when it gets above that, it could go up by the previous move. So you see that with the ES, and you see this in here. So in that. Now, where did it sell off? Yeah, it sold off to here. Once it got above that, it went up by that amount. So I'm just telling you, this price support and resistance is a big deal. That's number one. What do you think now? Well, I basically think that overall, the markets have done their gap fill. So, and I'm happy to show this. Forget about the MACD on the bottom. I'm going to show you on what I think overall longer term. I want to go over that also. Here is your gap fill. I would take that with the SPX. Now, I know, and you know, that a lot of bears are scared when there's any of these tape bombs about progression with China and all that. And I understand that. And I understand that it's hard to ever stay short. And it's real hard. In fact, with all the stuff coming out, I mean, just keep in mind, every administration wants the stock market to go up. So the key in there is that if the stock market goes down or the polls are going down, they're going to say stuff to keep it up. So, and that's exactly what happened yesterday when it was down 100. We were looking at it for it to go up, but it wasn't because we were looking for it to go up. We were combining it with an inverse head and shoulders. You could see this without any indicators right there. There's your inverse head and shoulders. So, and then you had a bigger inverse head and shoulders. And then you had, and I'm sure Lorna's all over this, you had a rectangle. I'm really into consolidation patterns. So, and then you had a triangle on the close. I missed that one. We were going to respect the break in either direction, but it was so late in the day. So I'm just telling you, these triangles, these rectangles, these defined patterns are a big deal, and they can really help increase your odds of success. So, and the other thing, and I guess I'm supposed to mention here, somebody did a chat GBT of my trades from April 22nd to the 30th. Our average return in the Chart Patterns Mastery Room was 18%. We had 5 losers, 34 winners. So out of 34, 5 out of 34 were losers. Let's just put it that way. So not bad. So not bad. And when we're wrong, we try to lose just a little. So like today, we lost on something. It's going to happen. But getting back to it in here, number one, long-term perspective. We're right at resistance. A lot of times you get an indecision candle when you're at resistance, like you see now. So that's number one. Number two in here is I want to show you ultra long-term perspective, what I think. But the first thing you have to realize is they keep talking about, oh, there might be a China deal. Right here, there was no China deal, but there's no threatening of China tariffs. So we're back to where we were. So now if they say there's a great deal with China, it gets overshoots, well, then you're at big resistance and you look for the indecision candle and the follow through. Like tomorrow, if we're down, well, then you have a follow through candle. But the key in here is you don't have that yet. So you sort of have a futz around, we call it. And that's why I wanted to show you another thing. Inverse head and shoulders at resistance is not to be trusted. Inverse head and shoulders on a 1 minute with no resistance can be trusted. Look at the difference between these inverse head and shoulders yesterday and the lack of resistance on the way up. Triangle, lack of resistance on the way up. This time on a longer term chart, inverse head and shoulders against massive resistance. I don't trust it as much. So it's a great question, but I just don't trust it, whether it's the NASDAQ or whether it's the SPX, because there's just too much darn resistance. That doesn't mean to go crazy on the short side. Don't get me wrong. Doesn't mean that whatsoever. All it means to me is you don't have enough reasons. You don't have enough triggers. That's how it looks to me. You just don't have the triggers at the moment. And that's how I look at it. So you're stuck at resistance, you're overbought, but I'll show you historically what I'm thinking. And this is what I'm thinking historically. Let's say we're in a bear market. Now, you don't have to believe it, but let's just say we're in a bearish trend. Like I said, some of the most money I've made is on the upside in a bear squeeze because you go up so fast. So we've made a lot of money on the upside too. We play both ways. We don't just blindly play one way. So, I mean, that's just will get you in trouble. If it looks good, you buy it. If you see a topping formation, you try to find shorts. Now, the problem is you get these tape bombs. If you play the downside, you have to play it in a limited risk scenario like put flies. You can't sell a call spread out of the money. If you want to bet on the market going up, Yeah, you could probably buy call debit spreads or sell a put debit spread because the bad news, it's not going to be that bad. And you're in an uptrend. So I just want to explain on how we try to do it. And that's what we're trying to do. But let me go to a different perspective. So give me 1 second. I'm trying to manage trades for you in the background, just so you know. All right. So going back to it. First things first, I thought you'd love to see this. Those are the historical precedents since 1950. Now it only goes to 2020, but that's close enough. You'll see the first 2 days of May are usually pretty strong. Now, I know, and you know, there's a lot saying, oh, May is strong, and it has been, let's say, a lot of times in a row in the 90s and early 2000s. That's true. But then you have the other thing selling May go away. So what the heck are you going to believe? Well, I'm looking at this. Look at the performance after the first 2 days of the month over 70 years. It's not so hot. But like I said, that doesn't mean to go whole hog short whatsoever. What it means is I'm going to look for reversal patterns at resistance because these sell-offs can be big and you don't have to pick the top. So that's one thing. Number two, what do I think longer term? I think longer term, you're going to test the lows. But a lot of people say, well, you get a V bottom if the Fed intervenes. Well, the administration might intervene. You never know. But theoretically, I'll show you what I think. What I think is that you're going to have a lot of longs, a lot of short opportunity. They're always there. I want to make that clear. So that's number one. Number two in here is most of the time that I see when sentiment is this negative, I see the big rallies to work off the negative sentiment. I also see the weekly chart get back to overbought. So even in this big sell-off, every one of these got overbought on a weekly MACD on a weekly MACD on the S&P. So now this was in a downtrend. Don't get me wrong. This is in a downtrend. Now you don't see it here. Yeah, that's the problem. That's why right here, you might say, well, it got over the 50 moving average. Like I said, I don't use these as support. On the way down, it's animal spirits. I use these as resistance, but when it gets over it, I'm looking for the doji, the indecision candle. Almost every one of these had a follow-through candle on the downside that you could take advantage of, and you could wait for that. You could wait for that. So, but see this right here? Every one of these got overbought. And then you go into now. What's it showing you? You're not overbought yet. Now, I'm sure after tomorrow, it'll be overbought. So don't get me wrong. I'm sure it'll be overbought. So the point is, though, that when you look at this, I'll show you historically. I just showed you the performance in May. But this is the sentiment table. This is a chart of a normal sentiment cycle over the last 100 years. So you get the enthusiasm, you get the first sell-off, where everybody thinks they buy on the way down. You get the panic, you get the big short squeeze, and then the consolidation. So I'm going to put this side by side with the transports. If you don't think this happens often, go and check out on the right the transports. And I don't know about you, but this sure looks familiar to me. So there's the transport. I mean, does this look similar or what? You have this, you have this, you have the first break in the consolidation, you have the panic sell-off followed by the sharp rally, and then you have the futz around, which can take months and months. That works off the negative sentiment, and that works off the negative MACD. That's how it looks to me. So it works off the negative sentiment. It works off the negative MACD. That's what I've seen. So I wouldn't be surprised. I think we're in this stage. We're right here. Right here. Where now you can futz around for weeks and weeks until the weekly MACD gets overbought. That's how it looks to me. So that's where I think we are. It doesn't mean to blindly short. It doesn't mean to never buy anything. We've seen a lot of great buy ideas. So, I mean, in this type of market, that's what you get. You can have buys and sells. So, just keep that in mind. So what else are we going to do? Well, number one, I thought I'd show you what I mean by a doji and a reversal. But the first thing I want to show you is this. I want to digress. When was the bottom? After this sharpest sell-off, the moving averages are going to slope straight down. It takes time to work off that damage, and it takes time for the moving averages to flatten out. So like Mary Ellen, she did the monthly trader call last night. She's great with moving averages, using the 50, using the 200. Other people use a 31 or a 30, whatever you use to see the overall trend. So how does it usually end? See this right here? See the sell-off? See the inverse head and shoulders? I call it the Stewie pattern, because if you highlight, it looks sort of like Stewie from Family Guy. And then you get the defined trend line and then the break up. Now that's a daily chart, but don't you find it fascinating that the 1 minute chart of the ES yesterday looked exactly the same? Believe it or not, what I showed you was a daily chart, but I don't know about you, but this sure looks like that daily thing I just showed you, and then the inverse head and shoulders. So, except that was a 1 minute. The other thing I showed you, like I said, was a daily, but it works on multiple time frames. So, what I think is that this is going to take weeks for this to stabilize. And most of the sell-offs I've seen don't end like this. They don't end with a V. Yeah, you did with the Fed intervened. Even this looks like a V. But you were able to draw a relatively stable trend line. What I mean by that, a lot of people try to draw one like this. Something sharp. That's ridiculous. The more horizontal, the more important. So you had a trend line here. You have one here. You had one here. What's the moral of the story? You're not even close to developing a trend line. That's what I'm telling you. You're not even close to developing a trend line. So that's why I think we could go lower later. But like I said, it might take months to work off all the negative sentiment. So keep that in mind. So what else am I going to show you in here? Well, I want to show you a cycle chart. It was very popular, what I showed earlier. This corresponds, you'll see it in there. That corresponds to, and I know there are people that blindly put in cycles on internet and all that. What this is, though, that's a big deal is that is, and I'll put it back up. There you go. So companies voluntarily don't buy back stock 5 weeks prior to earnings. So they can't buy back stock the last 10 minutes, but they voluntarily don't buy back 5 weeks prior to earnings, most of the S&P stocks. Most of the bottoms coincide with when the majority of the companies can buy back stock, like now. So the end of April. So just keep that in mind in there, that and that doesn't mean you can't go down. Don't get me wrong. What it means is bad news is less likely to torch the markets when companies can prop up the stock. That's what it means to me. So it's more bearish patterns are more likely to work. And you'll see a lot of times with that futz around I showed you with the sentiment cycle also coincides with when companies can buy back stock. So once you get back to the middle of June, when most of them are in a buyback blackout, that's when I think you'll see the next leg down. So you get these cycles. So just take that Apple is usually August. I mean, let's say August 1st. It's usually the end of July. So that's June. There. So you take the June and you see buyback blackout. Yeah, you went down. So you have buyback blackout. You went down. So I'm just telling you, bad news like tariff news is more likely to torch the markets when companies can't buy back stock. I mean, that's what we've seen. So that's what we've seen. Chart patterns mastery, by the way. I'm not getting out yet of what I showed. If I get out of anything, I will go back in and log in and get and just say I have an alert. So I'm just telling you, I can't triple broadcast without it messing up the bandwidth. So I just want to make that clear. But usually with this, you futz around now for weeks. Now, that's one side of the equation. How about today? Well, number one, like I said, the Russell and the transports need to go up. And the reason is because the Russell led on the way down and so did the transports. So when the transports are on their low, they're on their low for the day. And they're here on a daily chart. So they're all the way down in the dumps. Let me show you that. So transports are down here. You know, that's people worried about the economy. The Russell has had a good rally, 279 points. The transports had a good rally, but they're still in big old downtrends. They haven't invalidated their downtrends. And that is too sharp a slope. So if you want the broad market to go up, you better start seeing the growth-oriented indexes outperform. Believe it or not, last week they were outperforming. If you go put on the left the NASDAQ, you'll see that the NASDAQ here was going to a new low while the Russell was up here. Or let's say not a new low, but it was testing this area. And the Russell was way above it. So you got positive divergence. Now you're getting it the other way. You're getting that the NASDAQ is up at this level right here. That's April 2nd. You're right there. April 2nd here is up here. That's why at the moment, the Russell is such a big deal. So if the Russell fails to get in this area, it's less likely the NASDAQ busts up against above resistance. That's the way it looks to me. I mean, that's all. By the way, chart patterns mastery. Yeah, I got out of that one spread too early, and we took a small loss. It's a gain now. It happens. So just keep that in mind. Now, getting back to it, though, definitely I'm keen off the growth-oriented indexes. So on the one hand, you might say, yeah, recessionary fears means the Fed might cut or more likely to cut or be dovish. But with the tariffs, you don't know that. But I will show you some things that are signs of a recession is dangerous. So the first one I see, and I'll go to FinViz and show you, is if you go to commodities, watch what they've done in the last week. To me, it's pretty dramatic. Go and put in futures. FinViz is free. I haven't even logged in. Go into the commodities and check out what's happened to the commodities. Corn, orange juice. Well, you know what happened with lumber and sugar, and crude oil has gotten destroyed. Copper's gotten destroyed. So crude oil has gotten hit. I mean, a lot. Now, the reason I'm showing that is those are recessionary tells, especially copper. A lot of people call it Dr. Copper. So that's one thing I'm watching. But one thing I'm watching today is a different thing. And that is the commodity index is going down today. Is going down, but so is the bond market. What is that all about? So that is a warning sign. So you're seeing the Russell go down, the commodities go down, and the bonds go down. So that doesn't give you warm fuzzies about the ES having a massive rally. So that's what I see. That's why we did something in the indexes. So now the next thing. I watch the Russell, and another thing, I think it's a forgotten art. I watch the internals. So I don't always watch the internals. But when I see this going to a new high, and I see the Russell intraday rolling over, well, if the advanced decline stayed up here, well, then I'm like internally we're fine. But instead, the advanced decline went straight down. But the bigger deal is that when the markets rallied, they stayed on their low. So now I'm not wildly bearish in here. Like I said, I think there are weeks and weeks that we're going to futz around. I think we're in the futz around stage. That's all. I just think we're in the futz around stage. And I think what's going to happen now is your bears are going to get frustrated and bulls are going to get frustrated because we're up against resistance. So it's hard to chase the market, but you keep hitting support zones and bears are going to give up. And you've seen it already with everybody saying, oh, we have a depression. All of a sudden, 2 days ago, they're like, no, they're going to negotiate with China, so everything's going to be fine. So you vacillate between these panic things, like I said. Yeah, unfortunately, my thinkorswim is locking up everything. That's what happens when you dual broadcast or triple broadcast. So just give me a second. You're going to see one of those performance things detected. So I'll see if it works. I hope you can see the screens now. So the key in here is number one, like I said, you're at support. It's hard to play the market to the downside if you're at support. So you might say we're going down. I understand where you're coming from, but I have to see a more defined bear flag. That's number one. But if the Russell doesn't go up, you see the Russell stuck at support, that zone. If the Russell undercuts it, then I think the ES undercuts it. No doubt. In fact, it might be forming a bear flag as we speak. Might be. Or a bearish pattern. The only reason it's holding, I think, is because the Russell's holding on the left. So that's what I see at the moment. But I don't have warm fuzzies about the markets in here. I don't have anything. But I will tell you that of what I'm seeing right now, and answer your question, what I think the market's going to do, I think that's what you're going to have to watch. Right there. And if that doesn't hold, there's no support. So I think the onus is on the bulls here, especially with the Dow Jones transports on the low. So if that doesn't hold, you're talking about that amount. That gets you down to here. So in fact, I'm getting a little nervous about what we have on that will be too right. I have to relog into thinkorswim. I apologize for that. But that's how I look at it. If this doesn't hold right here, look what's going to happen. That's how it looks to me. So that's what I'm watching. This better hold. So, I mean, that's what I'm watching. The other thing to watch in here is individual stocks. So for now, everything's holding, and it's holding because of the support. So I would put over here, like I said, Thinkorswim is being a little feisty here. So the first thing I'd watch is that Russell. The Russell is holding. It's holding in that support. I've been using the Russell as tell. If the Russell holds, then this is more likely to hold. On the other hand, probability-wise, the transports, they're okay. Nobody seems to care yet. That's how it looks to me. So that's where I am at the moment. But if that doesn't hold down here, now how about the NASDAQ? NASDAQ doing the same thing, but it's got a little more support right in here. But if that doesn't hold, yeah, the NASDAQ will go down as well, and it'll pull down all the stocks you know and love. At the moment, though, I think you have to take a 15-minute chart and realize you're oversold on both. Both oversold using the MACD. So the key now is how it works off that oversold condition. It might take an hour. So if it retains this structure in the next hour, and that MACD gets overbought, yeah, I think that's a big danger sign. But at the moment, I don't see the trade. I don't see going crazy one way or the other, so I'm not going to. And I really, like I said, I think the key is that Russell. And that's what I'm going to be keying off of, the Russell. So we're going to do that and see where we go from there. I don't see it right now. But you better see that NASDAQ hold. For now, it's holding. It's fine. Like I said, I'm not sure you're breaking down whatsoever. The market has too many positive things going on. I mean, possible positive. So I don't think we're breaking down right now. We're oversold. But just look at the objective. But I just don't see it happening yet. So the whole point is that you got to work off that oversold. You could use Thinkorswim. You can use anything you want. But when it's oversold like that and you're still in a longer term uptrend, well, hourly uptrend, now you could see where the objective is if you sold off those support areas. But I just don't see it at the moment. Just don't see the bearish trade yet. So I'm just not going to do anything until you work off the oversold condition. So I just don't see the trade at the moment. So you're oversold and you have some negative things like the Russell. What happened? The Russell just went up. So why chase it on the downside? Now, if the Russell went to point of no return, which what I mean by point of no return is if the Russell broke everything, all of this. But the problem is you have a lot of support. So it's real possible it's just a non-event day. It just seems like a non-event day to me. And like I said, you could use any MACD you want, but what I use is just the 310 16 simple. Like I said, you can use you could use an exponential, you can use a simple. They get you almost to the same spot. The only thing is you're just trying 310 16. I'm using a simple. You can use an exponential, but the point is don't take it too literally. All you want to know is it overbought in an uptrend, overbought in a downtrend, overbought in a downtrend, and vice versa? That's all you're caring about. And right now, like I said, this tells you nothing. I don't care about the degree of the MACD. I care about if it's overbought or oversold. If it's oversold, and like I said, it doesn't matter whether it's -1, -10. Is it oversold in an uptrend at support? It sure is. So there's no reason to play it to the downside. The key is how it works off this oversold. Does it work it off by retaining some kind of bearish structure? As you see, it isn't. And that's what I see right now. Like I said, if the Russell rallies and this is oversold, you don't have to buy the NASDAQ if you don't feel like it, but you're not going to short it. There's no reason to short it. That's where the MACDs come in handy because you've had a big old uptrend. So you've had a big old uptrend. And like I said, you're not going to break down unless, number one, you see all the stocks you know and love break down. They don't look like anything. They act pretty well. Everybody's going to wait for the apples of the world. So I don't see the trade on the downside when you're oversold. If the Russell was all of a sudden down, yeah, then I play it to the downside. So you just don't have those kinds of things yet. I just want to make that clear. You just don't have those tells. So right here, if you want to use this instead, because we have a lot of them we use. And like I said, the whole point is to find if it's overbought in a downtrend, oversold in an uptrend, and vice versa. And what do I mean by that? If you take the ES and you take a 15-minute chart, I use the ATR trailing stop. That's my go-to intraday. If I want to time an entry, I might use a 20 after I get in something as a stop place. But what I see right now, that's chop. You're oversold. And if you change the MACD to, let's say, exponential, you'll see it's extremely similar. Yeah, it's still oversold. So the whole point is it's oversold at support. So you don't play it to the downside. So that's the way I look at it. Like I said, it seems like a non-event at the moment. Now, you might say, well, what are you doing like Meta? Well, a lot of people say that after it has a big gap, that it goes up later. So I want to show you that misnomer. Number one, if the whole market sells off, it'll probably go with it. But most of the time, when it gaps up on earnings, it does nothing for a week. Look at this. When it gaps down on earnings, it usually does nothing for a week. Look at that. Gaps down, that was a low. Gaps up, that was a weekly high. So it doesn't hurt to do something neutral in there for next week. You're now at resistance. A lot of times on the gap up, it goes down the next week. Not that much. So we're going to look at neutral ideas later. I just want to make that clear. Right? It's overbought. It's at resistance. And historically, it does nothing after a big gap. A big gap. Not a move up. A big gap. It just sits. So I'm very interested in doing something neutral. So Tesla, what do you do? Well, longer term, it looks pretty good. Looks like a possible bull flag. This is where that MACD comes in. So I'm going to put Tesla on the right, but the MACD on a simple and the MACD on the exponential. You'll see they're very similar. Both overbought, but it's in an uptrend. If I determine the uptrend on a daily chart, I use a 50 moving average in the 200. On a intraday chart, I use maybe a 9 to 20 in the ATR trailing stop, but I don't use them as support. I use the moving averages as my stop areas. So Tesla looks pretty good. Just won't go up today. Overall, it looks fine. Looks like a little rectangle. In fact, I'm sure Lorna's all over that. That sure looks like a rectangle. Over that, it could go to 340. But maybe it goes to 270 first. But still, it looks pretty good in the grand scheme of things. And I'm telling you right now, Google's already come out with earnings. And it acted bad with earnings. So I'm sure you're talking about Amazon and Apple. So what do I think? Well, I know I don't mean it as a cop-out, but I basically think that markets are going to be stuck in a zone. You're stuck in that zone. How about hourly? I think you're stuck in that zone unless the Russell all of a sudden is up like 50. But I think you're going to be stuck in this zone for weeks. Like I said, it's going to take a long time to repair the damage in the NASDAQ. So now, the next thing I wanted to go over, because I have 15 minutes, so I have a little time. The next thing I want to go over is what's happened other times we've had sentiment this bad. So I thought you'd want to see that. So give me a second to get it up here. That, like I said, Thinkorswim's a little uncooperative. By the way, like I said, I might look to do something bullish in Tesla for next week. The stock sort of has a mind of its own. But getting back to it, here's the SPX. Other times you've had extreme negative sentiment. It takes weeks to work off that negative sentiment. So that's what I mean. So if you go back to 2022, where you had a ton of negative sentiment, right here. So you got a lot of negative sentiment. And then you had a massive rally. You had a lot of negative sentiment. This is where I think we are. I think we've had this move down. You got the test of the low, and you're going to go to here. So you're going to go above that, and everybody's going to say, I guess it's a new bull market. I've just seen that a million times, that you make a higher high, not an all-time high, but a higher high, and then the sentiment shifts to bullish. That's what I think you're going to get. But right now, it's still a work in progress. And like I said, when you're playing these things, so when you're playing, let's say SPX, you have to understand that if I play on the downside, I'm not going to blindly be mechanical and say, oh, you're at a moving average or you're over it or this or that. I'll look for reversal patterns. You can see these reversal patterns. And you don't have that yet. So I think we're stuck in a zone. That's all. I just think we're stuck in a zone. And that's what it looks like to me. Just stuck in a zone, a frustrating zone. So that's what I see. Like I said, the Thinkorswim is really sticking. It's making it a little rough for me to put in stuff. And that's why you hear me like being quiet, because just it's being extremely unstable. So you get that a lot when I'm trying to triple broadcast. So I have to keep exiting Thinkorswim. So I apologize. So, and when it gets like this, unfortunately, I have to just use TradingView. And that's what I'm going to do. So I hope you could see me. But what do I think with everything else? I don't see the break. I just want to make that clear. I don't see a break until something tells me. I mean, the Russell's rallying. And chart patterns mastery, if I can log into the site, just look at your alerts. So, like I said, right now, there's nothing that looks that bad. Nothing looks that good, in my opinion, because you're stuck at resistance. So you've got to try to pick your spots. That's what we're trying to do. Just trying to pick our spots. So the other thing I'm doing, like I said, I don't see the play on the downside whatsoever until I see how any oversold is taken care of. Right now, it doesn't look bad. Like I said, if I'm right, you're going to do nothing for weeks, just nothing. So, I mean, that's how it looks to me. Just looks like nothing for weeks. Now, that being said, are there some things that look like so amazing? Well, these could be bull flags. They could be, sure, and they could fill the gap. On the other hand, Visa looked like it was going to get up to here and it just failed. What's happening is things are selling off and then they're coming back. Why? Because they have buybacks. So I just think it's a non-event at the moment. And that's how I'm playing it. And like I said, don't get me wrong. I look for long ideas all the time. So I got to see the Russell stay up. But a lot of times you see things, other things, like you see the cheapies going up. And we played the cheapies yesterday. So we played QUBT and did fine. But like I said, when you see all of this, you don't see the kinds of patterns that tell you you're going down. Let's just put it that way. This, you saw the pattern. This doesn't tell you anything. A big mistake is just blindly shorting because it's at some kind of resistance. No, you don't have a reversal pattern yet. So that's where you are at the moment. So Lockheed, we have a position because it's right at resistance. It won't go up, but the market's probably going to keep it elevated. So that's why we did a Lockheed. But I'm just telling you, when you're at resistance, if I want to play something on the downside, I better see a break to the downside. And you don't see it yet. That's what I see. There's a break to the downside. Everybody was shorting gold on the way up. Do you see the break? And then if you put in, let's say, a 4-hour chart, you saw this go back to the zero line. Right here. Right at resistance. You don't have any semblance of a break in the SPX yet. So that's just something you have to respect. So that's where I am. Like I said, the higher that the Russell goes, the more likely everything else goes up. Everybody seems to be keen off the Russell. I just want to make that clear. I mean, that's the way I look at it. And also, keep in mind that JC is doing a thing on Mastering the Trade live later. So much of his book are things that I talk about as well. So he talks about rectangles. He talks about follow-through candles. He likes to buy on the way up. So when you see this, even on a 1-minute chart, his things are talking about buying when you have that. When you get some candles higher than two previous. So that's the way I look at it. Candle lower than the previous. Candles higher than the previous. It's not perfect. You're trying to combine it with other factors. But I'm just telling you that you're trying to combine both things. That's all I'm telling you. I like that 3 reasons to do a trade. I talked about that in the Essentials room on Monday. So I don't know if it's recorded. But the key in there is you want 3 reasons to do a trade. If you're trying to short gold on the way up, what's your 3 reasons? It's too high. It's parabolic. Well, I heard that here. I heard that in here. You just didn't have that candle. Usually after a parabolic move, you want to see a massive red candle to show a change in direction. On the way down, you buy a price support or the moving average for that matter. So on the way up, moving averages can help with support. On the way down, I just see price works with support. So different things work with different things. That's the way I look at it. I'm trying to get a better feel of the overall market. I don't see the trade right now. Like I said, if you see the Russell, it's all extremes. So I'm trying to scan all these charts. I don't see an extreme in the Russell at all. So because of that, I don't see an extreme in the ES at all. Now, if the Russell all of a sudden is down, then, bearish patterns are more likely to work. But I'm sort of tongue-tied because I can't figure what to do at the moment. When I get like that, I usually just get out of things and start again. And that's where I am right now. Like I said, I would key off this. That's what I do. Now, I'm telling you, I like the idea of something under the market, no doubt about it. And that's what we have on. But that's what I'm doing. So definitely trying to play both sides of the market. And like I said, I'm keen off the RTY today because that's been the weakest index the last couple of days. As you see, every time that moves, the broad market moves. I mean, that's what I'm seeing, the S&P. So everybody take care. Chart Patterns Mastery. I'll be right back in the room. So take care.